Fed's going to increase rates on Wednesday, probably 0.25%. 0.25%. That's what it looks like the Federal Reserve is going to do on Wednesday. So if they raise rates 0.25%, that makes the dollar stronger. Remember all the years after the recession that I talked about the Fed trashing the dollar, right? Printing more and more money through quantitative easing. And as we saw more and more quantitative easing, we saw the dollar devalue. That's very intentional. They were trying to devalue the dollar. Now, in a growing dollar environment, in other words, the dollar getting stronger, primarily due to the dollars being weighed against those other basket of currencies that have gone down, the Fed is going to make the dollar stronger. That is counterintuitive to everything that the Fed has been doing for the last 5 years. Now, all of a sudden, this is part of Fed policy. Well, we're watching the data, and the data says, wait a minute, you're not watching the data. That's a bunch of garbage. What data exactly are you watching? If you're watching the data that you've been watching, there's no possible way you could be raising rates. So you just come out and say you're raising rates because you're trying to get a little ammunition in the 1 or 2 ammunition boxes that you have left yet. And you're trying to load it up in case there's a crisis. Now you've got a 0.25%, you can cut rates to get back to cheap money to try to help the economy if we get back in trouble. It's a game, it's a joke, it's a false positive, it's a false negative, everything's false. Is anything real? No. The only thing that is real is the real economy, the real underlying fundamentals of the economy. Industrial production going down, wages being stagnant at best. When we factor in inflation, we're not seeing anything. We're seeing deflation. We're seeing more people unemployed than were unemployed in 2007. We've got a 1977 labor participation rate with the highest part-time workforce that we've ever had. I mean, when we look at all the real data, unless we want to say that the fundamentals, the underlying fundamentals of the economy look really good for 1977, unless we want to add that for 1977 in, then our economy stinks. And who wants to be in 1977? Listen, I'm not even at this point, I'm not even trying to get to the 21st century. I would be happy to just can we get into the 80s or 90s with the labor participation rate? That would be a good thing.